Welcome to It Depends. Aaron would say, buy the house. I would say, maybe not so fast, because the right move is not always obvious. We are taking on mortgage and real estate headlines, hot takes, and advice that sounds good online, then breaking it down to what actually matters. Drop your opinion, challenge ours, and send us a headline to debate. Because the real answer is usually, well, it depends. So, Aaron, you had shown me a headline that you had seen where list prices are down 4% year over year. Number one, I want to dissect, year over year. So let's talk about that. And then what does that mean for us long term? So list prices are down 4% year over year.
Yeah.
Time last year, compared to this time last year, list prices are down 4%, right?
I think sellers are finally getting the fact that this is not 2021. I think it's taken some years, and I think that sellers are finally realizing that, they made 40, 50% equity gains, and it's okay to give back some of it. And that's a great thing. And I think in my opinion, I think we're going to see that continue for some time until there's more buyers out there. Obviously, it's case by case. And so that's in your market.
My market's a little bit different. But
Yeah.
You know what I'm seeing, and when I'm having conversations with people, one of my favorite groups of customers are people that are selling their house. That's my favorite customer because now they've got money and we get to kind of move around. What are we going to do with equity and where are we going to place, what's the next best strategic move? So I have a lot of those conversations. And so many times I ask the question, what did your realtor say that you should list your house for? Well, they said I should list it at $325. So what are you thinking? $325? Well, I really would like to try fit $350. Well, that's a stupid idea, and let me tell you why. Because your house is going to sit on the market. By the time you decide to decrease it, someone's going to think something's wrong with your house. You just wasted all this time. In Texas, I always think about this time of year, storm season. So why in the hell would you take a chance that a tree is going to fall on your roof and now you got a roof claim in the middle of trying to sell your house or whatever could happen? Like, to me, price it to sell and get it sold.
Yeah.
Does that number mean that? Are we talking about list prices are down because people are starting to face reality? But I still see a lot of people wishing and hoping for a better number than what the realtor told them.
I think that's true, Michelle. I think that finally people are starting to get it a little bit more. But, I would tell anybody watching this podcast, thinking about listing their house, interview 2 or 3 realtors, ask them to be honest with you about your list price. You're going to get a consensus number. Go with it.
But do the stuff that needs to be done to get it sold too. Like, it's not just about the numbers.
For sure. And you got to be careful the agent who just agrees with you, right? Because there's a lot of agents out there who really just want your listing, and they may think your home's worth $325 and you say, I really want to sell for $365 because my neighbor sold his.
Call those the yes man, the yes ma'am realtors.
Yeah, totally. And look, your home is only worth what somebody's willing to pay for it. And just because you have nicer carpet than your neighbor had, and he sold his for $400,000 in 2021, it doesn't mean you're getting $400,000 today. And so it's a different market, it's a different time, and you hire an agent because they know the market. And so interview a couple of them, get a consensus on what your number is, and go with it. Because to Michelle's point, Michelle, I look at Zillow all the time, Redfin all the time, all sorts of stuff all the time. When you see a home that's been listed for 100 days, right? What does that tell you about the home?
They didn't price it realistically in the first place, or there's something wrong with the house.
Something's wrong with that house. Now, that may not be the case. It could just be that it's priced too high.
Perception's reality.
But yeah, to me, you really get one great shot at this thing, and that's at the beginning. Because if you don't price it right at the beginning, right, and you got to wait 90 days or 120 days, you're not getting close to the offer that you want to get. Because once the buyer sees it's been listed, they think you're desperate. Now, you may not be desperate, but in their mind, they think, oh my God, this house has been on the market for 4 months.
You know how many times I hear that from buyers all the time? They'll go, I'm gonna go look at this house. It's been on the market for X number of months. So, I'm feeling like the seller's pretty desperate. So I'm going to offer $50,000 less or whatever.
Right.
Whatever it is, they're offering much less typically than what the price difference would have been if you had just listed it right the first place.
Totally, totally, and that's why you're gonna I think the data even shows if you're on the market 90 days, you end up taking 5% less than it would have been if you would have listed it right at the beginning.
Yeah.
So, if it's a $400,000 house, you're gonna take a $20,000 haircut from what you would have listed it on if it gets past that 90-day marker. So, you gotta be super careful, and, I know, look, you missed the window, right? You missed it. I
Those
mean,
days are gone. But guess
those days
what?
are over.
If you're buying another house, you're getting a better deal. So sell your house at a deal and go buy a deal.
Yeah, right. Go get the money from your next seller, right? So I love that Michelle. Like, so I want 400,000 for my house, right? The next house I'm buying is 600,000. Well, maybe I take 370 to sell it, but I offer 570 over there. So I try to
Yeah.
make it work out,
Yeah.
right? But don't be so married. Don't be so emotionally attached to your house that you can't see reasonably. And like I said, you have to admit to yourself, you missed the window. 2021 was the window. We all missed it. If we didn't sell our house in 2021, we missed the peak window, right? Now, it may come back someday, but your life is probably changing. And how long is it worth it to stay in, everybody, I got a 3% rate. I'm never leaving it, right? The
Yeah.
difference between a 3% rate and a 5% rate could be a few $100 a month. Is it really worth it to not love your house anymore for a couple $100 a month?
Hell no. I mean,
No.
your therapy sessions cost the difference.
Right, right. I mean, look, things have changed. Technology is awesome. There's killer kitchens. There's all sorts of stuff that's come out in the last 15 years since you bought your home. Yeah, you got a 3% rate, but you're missing out on all that stuff. And if you looked at renovation costs today, and if you try to renovate your home, what the interest rate's going to be on that? It's going to be 7.5%, 8% if you have really good credit. And it's not an easy loan to get, and you got to manage contractors. I mean, so I just think, Michelle, I think part of this is exactly that, is that every home has a shelf life. We used to, before the pandemic, the average person would move every 7 years.
Yeah.
Like
What
that,
is it now? 9 years?
it's like, I think it's like 11,
Oh
right?
my
It's
God.
10 or 11. And so people
You've
historically,
worn out the carpet by then.
totally, like it used to be 7 years forever. For 70 years, it was 7 years. That number we could all count on. We used to market to that, right, Michelle? Like, we knew somebody's been in their house 6 years. You better start marketing to them because they're moving in a year.
Right.
But now it's 10 or 11
Your
years.
loan officer's probably out of the business by then. I mean, unless you're like diehards like you and I that just can't ever quit.
Right. And so after 11 years, your life has changed a lot. Right.
Yeah.
And so don't be so tied to that rate, because it's a rate. You could buy stuff down, get the house you want, be happier, be in the house you
Well,
really want.
here's the flip side to that coin. That rate allowed you to buy a house you probably couldn't afford without that rate, which then, even with the appreciation like it is right now, you still made more money because you were able to afford more house because of that rate. So take your wins and go move on.
Right. I love that, Michelle. Take the W. I say that all the time. Take the win.
W.
You have
You still
200,000
won.
equity. Take the win.
Yeah. I mean, you bought a house that you couldn't have afforded without that rate. So take your win. Move
Take
on.
your win. Take your money off the I talk to people about it all the time because I'm in Vegas. It's like gambling, right? You go to the casino, you started with $1,000. After a few hours, you got $5,000, right? You keep gambling, or do you take your $4,000 and say, man, I'm just going to go see shows. I'm going to go hang out by the pool. I'm
And it
done
depends
gambling.
on how much fun are you having. Is it time to, like, I've had my fun, I'm moving on, or do you stay where you're at and keep going?
Yeah. And so that's the risk, right? That's the risk. If you stay here and keep going, nothing says that look, I don't believe the TikTokers and I don't believe the YouTubers, but nothing says that we can't have a housing crash. And there's nothing that says we can't have a correction down to 5 or 10% in your market. So if your home's worth 400 today and you have 5 or 10% correction, that's not a crash. Your home was down by $20,000, $40,000. You didn't
Let's
take
talk
it off the
about
top.
that just a little bit.
Yeah.
So I've had a lot of conversation recently. And in our area, maybe it's just my area because I'm in Texas. I don't know that we even mentioned that. So I'm in North Texas. My market's different than Aaron's. I've had a lot of customers call with hardships, and we're having to, modify their loans. We've even had some conversations where a short sale makes sense. And that's different from where it was in '07, '08. We learned from that how to keep people in homes so that we don't have the market crash that we had before. I think the crash before is because we hadn't experienced anything like that in our lifetime. Not that it's never happened, but in our lifetime. And regulations were so different than they are now. So we had foreclosures because that's just what the mortgage companies did. They foreclosed so much faster. We're keeping people in homes. We're finding a way for them to afford to stay where they're at, to keep the market from drastically changing because of foreclosures. I think there's a big difference. And had we experienced some of the hardships that we have now and we were quick to foreclose, that might affect some values in neighborhoods, but we're not doing that.
Yeah,
Now,
I
I'm
mean,
not saying stop making your mortgage payment, we're not gonna foreclose on you. That's not what I'm saying. But we're finding ways to keep people in homes, which I think helps that market a lot. So, yeah, it's a market correction, which is different than a crash.
for sure. Make your payment. And what I'm about to tell you, make your payment, right? Don't not make your payments, too risky. But Michelle, I worked at Bank of America and Countrywide during the mortgage crisis. And those banks, Countrywide's not around anymore because of it, but they learned a very valuable lesson. And the lesson is keep people in their homes, right? Do loan workouts, do modifications. As
Yeah.
long as you communicate with your bank,
That's key.
chances are they're not taking your house. Okay.
Don't bury your head in the sand and not make the phone call. Don't be embarrassed. You gotta talk to your lender and tell them what's up.
Talk to your lender, tell them what's up, tell them your plan. If you're unemployed right now and you can't make your payment, they do not want to take your house. Foreclosure is very expensive, requires attorneys. They also don't wanna be on the Wall Street Journal or the nightly news kicking you out of your house while you're holding on to your baby crying, okay? They don't want that. They want you to be what they want you to do is make your payment, right? And they're gonna give you time, in all likelihood, it's not a guarantee, they're likely to give you time as long as you communicate with them, right? And so, I think that a lot of those lessons were learned, but at the
Mhm.
same time and I think that, there's risk of that though, everybody, because we all hear about how AI is going to take a bunch of jobs. Well, if AI takes a bunch of jobs and people can't make their payments till they figure out what to do about this thing, we could see that. We could see home prices go down by 5 or 10%. While some people may say, "Now, I just told you, and Michelle told you, chances are they're not taking your house." But some people might just say, "I lost my job. This was already a stretch for me. Take it
I'm
back."
gonna Yeah, yeah. I've got
And
somewhere else to go.
yeah, or I'm gonna short sell it or whatever. And now you have banks selling houses and it's tougher for a bank to sell a house. So you could see a market correction in your market. And so, do I think that's gonna happen? Probably not, but it could. And so that's the point that we're trying to make is that you made a bunch of money. If you have a desire to sell, don't hold on for the magic number. You've already made the decision to move on. You listed your home, right?
Mhm.
Close the deal, take the
Mhm.
W, right? Yeah,
Hey, let's just
if it
pretend. Let's pretend right now that we are in a market where it's possible 6 months from now you can't get as much as you could right now.
yeah.
Price the house right, get it sold.
Yeah, get a sold. Yeah, because it just makes all the sense. I mean, if you've already committed to it, get the deal done, right? Get the deal done. Now, I'm not telling you if you list for 400 to take an offer for 350, right? But if guy comes in at 385 and the terms are good and he's going to close on time, and I would consider you got to consider it depending on what you owe and how much you're going to the next house with. Like I said, ma- take the 15 grand from this next seller, you'll probably get it. So I just think that what happens today too much is that people get this mythical number in their head based on what Zillow's telling them or what they saw it was worth in 2021 or 2022. They really want that number still, but it's gone. The market's just not the same. There's fewer buyers, and those buyers are listening to podcasts like ours, where we're saying, you know, make a good offer, but don't overpay. And so, like I said, you made the decision to move. You listed your house. You signed all this paperwork. You had all these meetings. Get the deal done.
Yeah. Yeah, I would love to disagree with you again, but damn it, I agree with you. Just get it sold.
Get it
Get it
sold.
sold. Well, it's always, I love the topics. I love talking about what's going on in the market and just, whether it makes sense for you to make this next move, it really just depends. But
Yeah, I mean, totally, Michelle. We've talked about. I mean, you need shelter. Shelter is a need, and I think that we've all gotten a little carried away. I remember, I don't want to date myself, but when I bought my first house,
go
which
ahead
was
and date yourself. You're old.
36 years ago, 37 years ago, I bought my first house. Okay, my home, I think I paid like 135 for that home. When I
Yeah.
sold it 8 years later, I think I got like 155. You
Yeah.
you didn't buy a home back then hoping that it would double or triple in 7 years. It just
Yeah.
you bought the home because you wanted to have some pride in it, you wanted to own it, you wanted the tax write-off, you wanted a place where your
You
kids
wanted
could
to paint the walls whatever color you
paint
wanted
the
to.
walls,
Yeah.
so the kids could crayon the walls, you don't have to worry about anything. You get mad at your spouse and throw a plate across the room and put a hole in the wall, whatever. And so, that was the mentality. Today, we've gotten to this mentality that it's like buying Bitcoin. Like, I'm gonna buy a house for 400,000, it's gonna be worth 600,000 7 years from now. We gotta get out of that mindset because it's shelter. It's not an investment. There's a lot better investments, okay? But you need shelter. And so you might as well have the investment quality as well while you're buying your shelter. Now, there's a lot of pundits out there who say rent and then buy in the stock market. The challenge to that is that, Michelle or I can get you a loan today on a $400,000 house where you could put down like $12,000 or less. Okay. So it's all about the leverage. You bought a $400,000
Mhm.
asset for
Mhm.
$12,000. They're not
Mhm.
giving you $400,000 worth of Apple stock for $12,000,
Mm.
right? So, yes, you can invest your money if you had a lot of money. Um, but the strategy really is, to me, own your shelter.
Absolutely. Yep. I love it. Thank you so much for your time. Look forward to the next episode.
All right, Michelle, we'll do it again.
Thanks for listening to this episode of It Depends. Be sure to follow, like, and share us with others.